Welcome to the Deep Dive. We dig through the noise to find the insights that actually matter. Today, we're going to be taking a deep dive into credit scoring, specifically all the changes that are happening in 2024 and beyond. I think we've all got some questions about how it's impacting financial inclusion and even where AI fits in.
It is a complex landscape for sure, and it's changing so fast. So let's break it all down and see what it all means for everyone.
Okay, so let's get started. One thing that really jumped out at me was how Experian, one of the big three credit bureaus, how they're really positioning themselves. It seems like they're not just about those credit scores anymore.
Right.
They're calling themselves an information services and technology company now, working across all sorts of markets. What do you think about that?
Well, I think what's really interesting there is that broad view, it lets them connect all these different data points across different parts of your life to build a more holistic picture of your financial, behavior and health. So it's not just, did you pay your credit card bill on time? It's what are your habits? How do you manage your money?
So they're looking at everything like my car loan or, even my healthcare expenses and media subscriptions.
Exactly. They're taking all these pieces and they're putting together a puzzle, right? They get a much richer picture of how financially responsible you really are. And this is really important when we start talking about financial inclusion, right?
Right.
Making sure everyone can access financial services.
Yeah. And that brings up a really important point. There are millions of people out there, especially like new consumers, people who have maybe had some bumps in the road financially. They really struggle to access those basic financial services,
Yeah.
things like just opening a bank account or getting a credit card. And they struggle because they don't have a traditional credit history. But it seems like a total catch-22, right? How do you build a credit history if no one will give you credit in the first place?
Yeah, you're absolutely right. And that's where this whole concept of alternative data comes into play. So Experian's looking at ways to use data from sources that you wouldn't normally think of, being reported to credit bureaus.
Okay.
So things like your rent payments or your utility bills, even your streaming subscriptions. And they're using that to demonstrate creditworthiness.
Wait, so you're saying paying my Netflix bill on time could actually help me build credit?
Well, it's not just Netflix, of course, but the principle is the same. When you're paying those recurring expenses on time, it shows you're responsible, right? And that can be really valuable for building a good credit profile.
Okay. So that's a game changer for people who've been kind of shut out of the traditional credit system. So tell me, how does that actually work in practice? Like, what can someone do to leverage this alternative data?
Well, Experian has this program called Experian Boost. And what it lets you do is add positive payment history for things like rent utilities streaming right to your credit report. So it can be a big help for people with, not a lot of credit history or those who are trying to recover from some past credit challenges.
But does it really move the needle? I mean, can it actually make a big difference in someone's credit score?
Well, it's not like a magic wand or anything, but it can definitely have a positive impact. For someone who's just starting out, adding that alternative data can give them a real boost. And that could open up doors to credit that they wouldn't have been able to get before.
So it's not about erasing past mistakes. It's about showing that you're making good choices now.
Exactly. It paints a fuller picture of your financial life.
Okay, that makes sense.
Yeah.
But what about the future of credit reporting? What's coming next that we should be watching out for?
Well, Experian's really pushing this idea that just looking at past behavior isn't enough. They're really advocating for using cash flow analysis as part of credit scoring.
Cash flow analysis, what does that even mean?
Basically, it means looking at the money coming in and going out of your accounts to figure out, if you can actually manage your finances. Can you repay your debts? So your capacity to repay your cash flow is just as important as your willingness to repay, which is what traditional credit history is all about.
So it's not just did you pay your bills on time in the past, it's also can you actually afford to pay your debts right now?
Exactly.
Okay. That seems logical, but doesn't this raise some privacy concerns? I mean, giving companies access to your bank account details seems a little scary.
Well, it's definitely something we need to be careful about. Transparency and control over your data are super important. Any system that uses this kind of information has to prioritize your privacy and security.
Okay. So it sounds like the way we think about credit scores is becoming more nuanced. It's becoming more inclusive. But what about people who don't have a social security number?
Yeah.
Like new immigrants. How does this all work for them?
That's a really good question. So, while ITNs, individual taxpayer identification numbers, those allow immigrants to do things like open bank accounts and file taxes, they don't carry the same weight as a social security number when it comes to credit reporting.
Why is that? Is it like some kind of discriminatory practice?
No, not really. It comes down to the level of identity verification. A social security number involves a very rigorous identity check, so it's a more reliable identifier for credit reporting. But ITNs, you can get those with less stringent checks, so that impacts how much they can be relied on when it comes to credit.
So it's about making sure the information is accurate and preventing fraud, not about excluding certain groups.
Exactly. It's about keeping the system fair and making sure that credit reports are as accurate and reliable as possible.
Right. Okay, that makes sense. Are there any programs specifically for people who are just starting to build their credit history here in the U.S.?
Yeah, there is. Experian has a program called Experian Go. What it does is it lets people with no credit history create a basic credit report with verified identity information, kind of like a first step into the credit world.
So you're basically establishing your credit identity,
Mm-hmm.
which is crucial if you're new to the U.S. credit system. So how do you build on that foundation? How do you start building a positive credit score from there?
Well, that's where those alternative data sources we talked about earlier come in. So by signing up for programs like Experian Boost and making sure you're consistently paying those recurring bills on time, you can start adding to your credit report and building a positive score.
It's all about recognizing that responsible behavior. It doesn't just come from having a credit card. There are lots of ways to show you're financially responsible.
That's right. It's about giving people the tools they need to take control of their financial futures.
That's a perfect segue to another topic I wanted to bring up. Medical debt. This has been a big concern for a lot of people.
Yeah.
Is there any good news on that front?
Well, there is some good news. There have been some major changes in how medical debt is handled by credit bureaus. Over 70% of medical collections have actually been removed from credit reports.
70%. That's huge. What led to that change?
Well, there's a growing recognition that medical debt often happens because of unexpected events. It doesn't necessarily mean someone's irresponsible with their money.
Right.
So it's not always a good indicator of whether someone's actually credit worthy.
So just because you have medical bills doesn't mean it's going to automatically hurt your credit score.
Not necessarily. The system is becoming more sophisticated. It's starting to understand the nuances of different kinds of debt. And it's not just about removing those big collections either. Even smaller medical collections under $500, those are also excluded from credit reports now.
So even those little medical expenses, they won't have a big impact on your score.
Exactly.
It sounds like the focus is really shifting towards a more, comprehensive and fair evaluation of a person's whole financial picture.
That's the goal, to create a system that rewards good behavior and encourages improvement rather than just punishing people for past mistakes.
Okay, that's good to hear. But what about medical collections that are already on someone's credit report? Is there anything they could do to get those removed?
There's a lot of momentum to remove them entirely, so we might see some changes on that front soon. But for now, if you're dealing with medical debt on your credit report, the best thing to do is contact the healthcare provider or the collection agency and see what options are available.
So communication is key. Speaking of trends, let's talk about buy now, pay later. It's everywhere these days.
Yeah.
But how does it actually affect your credit score?
That's a big question. Buy now, pay later, or BNPL, it's really shaking things up. The problem is that it's mostly invisible to credit reporting systems. So it's hard to get a clear picture of how much debt a borrower actually has.
So it's like a hidden debt that could cause problems down the road.
Exactly.
What's being done to address that lack of transparency?
Well, Experian tried to bring BNPL into credit reports in a responsible way. But their plan kind of fell apart when Apple backed out of their BNPL program.
Wait, what happened then?
They were working with Apple to report BNPL loans in a way that wouldn't hurt people's credit scores. But Apple pulled the plug before it even got off the ground.
Oh, so we're back to square one with BNPL reporting.
Pretty much, yeah. There's talk of regulations coming, but the big question remains, is BNPL good credit, bad credit, or something else entirely?
It sounds like we don't really know how BNPL is going to fit into the credit world just yet.
Right. We need more information and a better understanding of how it works to make sure it's being used responsibly and doesn't end up hurting people.
Okay. Speaking of understanding, let's talk about how to stay on top of your credit score. How often should people be checking their credit reports?
Well, first of all, let's bust that myth that checking your credit report hurts your score. It doesn't. You can check it as often as you want without any negative impact. And actually, You can now get a free credit report from each of the bureaus every single week at annualcreditreport.com.
Every week. That's amazing. I remember when we used to only get one free report a year, so there's no reason not to stay on top of it now.
Exactly. When you review your reports regularly, you can catch any errors or weird stuff, you can see how you're doing, and you can make smart decisions about your money.
So with weekly access, there's really no excuse for not keeping an eye on your credit report. It's the best way to understand where you stand financially and take charge of your credit journey.
That's right. It's all about empowering yourself with knowledge and being an active participant in your financial well-being.
Well said. Okay, we've covered a ton of ground here, but there's one more thing I really want to dig into.
No.
Artificial intelligence. I mean, it's changing everything, and finance is no exception. So how is AI impacting the world of credit scoring?
AI is really revolutionizing things like data analysis, fraud detection, even customer service in the financial sector. It's making systems more efficient, more accurate, more personalized.
That sounds great. But are there any downsides to all this AI?
Like any powerful tool, it's got its pros and cons right. So there are concerns about things like job displacement, the possibility of bias creeping in, and even the risk that it could actually make wealth gaps worse if everyone doesn't have equal access to these AI-powered tools.
So it's not all good news when it comes to AI.
Not necessarily. The ethical questions are complex, and the technology is developing so fast that it's hard to keep up.
It feels like we're in uncharted territory. Lots of opportunities, but some risks too. So AI has the potential to really transform finance in a positive way, but we need to be careful and thoughtful about how we use it.
You got it. It's all about finding that sweet spot between innovation and responsibility, making sure AI is used to create a financial system that's fair and inclusive for everyone.
I think it's a really good place to pause for now. This has been such an interesting conversation, and I already feel like I know so much more about how credit scoring is changing.
Yeah.
But we're just getting started. We've got a lot more to explore in this deep dive, so stay tuned for more insights and analysis.
You know, the most interesting ways AI is being used in finance is in fraud detection.
Oh, yeah, for sure. That's a big one.
Yeah.
I mean, I'm always worried about identity theft and, someone getting into my accounts. So how's AI actually helping to keep our money safe?
Well, AI is really good at analyzing huge amounts of data, right? And it can spot patterns that humans might miss. So it can pick up on unusual transactions or suspicious login attempts. It can even predict new fraud trends before they even become a problem.
So it's like having a super smart security guard watching over my accounts all the time.
Exactly. It's constantly scanning for anything out of the ordinary, using really complex algorithms to pinpoint those red flags that could mean fraudulent activity.
So it's always learning and getting better as it processes more information.
Precisely. The more data it analyzes, the smarter it gets at recognizing and stopping fraud.
Wow, that's really impressive. But are there any risks with all this AI integration? Like, could it be too sensitive and flag legitimate transactions as fraudulent?
There's always a chance of false positives. Yeah. And those can be a real pain for consumers. But AI systems are always being improved to try to minimize those errors. It's about finding the right balance between security and convenience.
So it's always evolving and getting better.
Yeah.
Okay, but overall, it seems like AI is a really powerful tool in the fight against financial crime.
Absolutely. And it's not just about protecting consumers. AI also helps banks and other financial institutions reduce their losses from fraud, so it benefits everyone.
That's a great point. It makes the whole financial system more secure.
Okay, so we've talked about the potential benefits and risks of AI in finance. What's the big takeaway for the average person? What should we be thinking about? Well, I think it's clear that we're entering a new era in finance where technology is going to play a bigger and bigger role. It's really important for people to stay informed about how these technologies work and what they mean for us. And we have to demand transparency and accountability from the companies that are using them.
So we can't just sit back and let things happen. We have to be active and informed participants in this new financial landscape.
Exactly. The future of finance is being shaped right now, and we all have a say in how it turns out.
We need to be proactive and stand up for our own best interests. It's just hard to keep up with all these changes happening so fast. What advice would you give to people who are feeling a little overwhelmed by all this technology?
Just focus on the basics. Make sure you have a solid understanding of basic financial concepts. Stay informed about new developments, and don't be afraid to ask questions.
That's great advice. Empower yourself with knowledge and take charge of your financial future. Speaking of taking charge, let's go back to Experian Boost for a minute. It seems like a great way to improve your credit score, but is it really that simple? Are there any downsides?
Well, it's important to remember that Experian Boost is a tool. Like any tool, it can be used well or it can be misused. So while it can be helpful for a lot of people, it's not a magic bullet for everyone.
So who benefits the most from Experian Boost?
It's especially useful for people who don't have much of a credit history yet, like young adults, new immigrants, or people who haven't used credit a lot in the past. By adding positive payment history for things like rent, utilities, streaming services, it helps them build a track record and potentially boost their scores.
It fills in those gaps and shows that they're financially responsible even if they don't have traditional credit accounts. That makes sense. What about people who already have established credit histories? Can they still benefit from Experian Boost?
The impact of Experian Boost tends to decrease as your credit history gets longer. If you've got a long history of positive credit accounts, adding a few more months of utility payments probably won't make a huge difference in your score.
So it's a case of diminishing returns.
Exactly. The more good information you already have on your report, the less impact adding more data will have.
It's like trying to boost your GPA when you're already getting straight, as a few extra points won't really change anything. But is there any harm in using Experian Boost even if the impact is small?
There's no direct harm, but it's important to understand what you're signing up for. When you opt into Experian Boost, you're giving them access to your bank account data.
Which raises those privacy concerns we talked about earlier.
Exactly. It's about making informed decisions, understanding how your data is being used, and making sure you're comfortable with that level of access.
It's a trade-off between potential benefits and privacy. So each person has to weigh those factors and decide what's right for them. Okay, so far we've been focusing on individual credit scores. What about the bigger picture? How are all these changes in credit reporting affecting financial inclusion on a larger scale? Are we moving towards a more equitable system?
That's a really complex question. There are some positive trends and some challenges. On the one hand, using alternative data and looking at cash flow analysis is opening up new pathways to financial inclusion, especially for people who have traditionally been excluded from the system.
So we're starting to recognize that financial responsibility isn't just about having a credit card.
Exactly. There are many different ways to be financially responsible, and the credit reporting system is finally starting to catch up to that.
That's a good thing. But what are some of the challenges we're still facing when it comes to financial inclusion?
One of the biggest challenges is making sure that these new tools and technologies are being used fairly and equitably. There's a risk of perpetuating existing biases or even creating new ones if we're not careful.
So it's not enough to just develop new technologies.
Yeah.
We have to make sure they're implemented responsibly and ethically.
Absolutely. That requires constant vigilance, transparency, and a commitment to inclusivity. We have to keep asking ourselves, who benefits from these changes and who might be left behind?
It's about making sure everyone has a fair shot at financial well-being, no matter who they are or where they come from. We've covered so much ground today, from the basics of credit scoring to the impact of AI and the importance of financial inclusion. Before we wrap up, I have a question that's a little more philosophical.
Oh!
With all these advancements in technology and data analysis, is credit scoring becoming more of an art or a science?
That's a great question. I think it's becoming a bit of both. The science is definitely there. Algorithms and data points play a huge role.
But it's not just plugging numbers into a formula, right?
Right. There's also an art to interpreting the data, understanding the context, and recognizing the limitations of any scoring system.
So it's a blend of the quantitative and the qualitative.
Exactly. Credit scores are just one piece of the puzzle when it comes to assessing someone's financial health.
In the end, it's about using these tools responsibly to create a financial system that works for everyone.
Absolutely. That's the goal we should all be striving for.
I couldn't agree more. This deep dive has been incredibly insightful. We've explored how credit scoring works, the role of data, and the impact of AI.
It's been a pleasure discussing all these complex issues with you.
It's clear that the credit landscape is constantly changing. Staying informed is absolutely essential for making smart financial decisions.
Knowledge is power, especially when it comes to your finances. It's so true. Before we conclude, there's one more critical aspect we need to talk about: financial literacy and how people can empower themselves in this rapidly changing financial world.
You're absolutely right. Financial literacy is more important now than ever before.
Let's explore that in our final segment. Stay tuned for more insights and practical advice. Okay, so let's talk about financial literacy. It seems like, everyone's talking about it these days, but what does it actually mean in the real world, and why is it so important now?
Well, it's more than just knowing, basic stuff like budgeting and saving, right?
Right.
Financial literacy is really about understanding all those financial products and services, the whole system, so you can make good decisions and you're not lost in the weeds, you know?
So it's about being financially savvy,
Right.
taking control, not just, treading water.
Exactly. And this is even more important now because of all the changes happening in finance with AI, alternative data, all that.
So how can someone actually, improve their financial literacy? Where do you even begin? There are so many resources out there. Start with, good websites, books, podcasts, all that stuff. A lot of community organizations even offer free classes and workshops.
And don't be afraid to ask questions. You can always talk to a financial advisor if you need help, right?
Absolutely. It's like having a personal trainer for your money.
So to sum it up, staying informed, being proactive, seeking guidance, that's all key to navigating this whole world of credit and finance.
Well said. And remember, your credit score, it's just one piece of the puzzle. It's really about making choices that align with your values and your goals.
This deep dive has been so eye-opening, honestly. We've gone deep into the world of credit scoring and data. We've talked about the power of AI.
It's been great exploring all these topics with you.
And it's clear that this landscape is constantly changing. Staying informed is crucial for everyone.
For sure, knowledge is power, especially when it comes to your money.
I love that. Well, thanks for joining us on this deep dive. We hope you've learned a lot and that you have a better understanding of credit and financial inclusion now.
Absolutely. And if you want to keep learning and exploring the world of personal finance, we're here for you.
We are. We'll catch you next time on The Deep Dive.